Ladies and gentlemen, it's your boy once again, and we're going to talk about a stock, AVGO, which is Broadcom Semiconductor Company. But before we do that, you're going to want to smack that like button, hit that subscribe button, and also the notification bell so you can be notified every time I make a wonderful video that will inform you of which amazing dividend stock you should buy. So let's go! Woo! Broadcom is a semiconductor company which is infrastructure, software infrastructure for a lot of different companies, and they've been experiencing an insane amount of growth over the last, say, 8 to 10 years. Their revenues have increased 500% from 2014 to 2019. The stock price has been absolutely on fire. It's just experiencing a lot of growth because there's a lot of shortages in semiconductors and they're very high in demand right now. Everyone has been talking about this stock. For example, Jim Cramer just talked about it the other day. It's a pretty hot stock and it's got a big future. I could see a price target of this being $600. And I know a lot of people are saying, oh, you know, it's like $450 for one stock. How am I going to do that? I could buy these other stocks for $10. Just because a stock is cheap doesn't mean it's good. If you can't afford to buy an entire stock, you just buy a fraction of it. And that's what I do. Like, for example, every single week I buy about $250 worth of stocks. Sometimes if I think the market's overextended, it'll be a little bit less. But I can't buy a full one according to my weekly plan. So I'll buy maybe a fraction of it. Maybe I'll buy a third of one, maybe I'll buy half of one. So you just got to continue to buy these and accumulate the fractions until you have a few of them. It's got a P ratio of about 43 times price to earnings. And its dividend is a little bit on the low side. It's about 3.12 right now, but that's because it keeps growing. It has been increasing its dividend and raising its dividends, but it's grown over 100% since the beginning of the pandemic, and no company is going to raise their dividend 100% to match that. So, you know, you could have got it a few months ago at around 5%, but it is what it is. The only downfall of this stock that I see is that it's been growing so much that I don't know if I would touch it at this price. I'm not going to say it's a sell, I'm not going to say it's a buy. I'm going to call this a hold. You're going to want to do your own research because, like I said, the price target is $600, but I've been talking about other stocks in my other videos that I think have room to increase 50% in the next few years, where this, it might only increase 30-20% in the next few years. So dividends are going to increase. I don't think that's a problem. I think the revenues are going to increase. So it is a good stock. I personally don't think I'm going to buy it at this exact price. If it dips a little, if it dips to around 400, I'll definitely buy it. So that's kind of where I stand on that. But do your own research, watch some other videos, learn some other information, read some articles. You want to understand the fundamentals of any stock before you buy it. And remember, my strategy is to accumulate dividends. I'd like to see an average of 4% yield. I'm a little bit lower than that right now because I've been buying a lot of Apple, Microsoft, because I think that they're going to continue to grow. But stocks like this with these high dividends and other dividend stocks that I talk about are very good to add to your portfolio. So do your own research, and that's all I got for this episode.